Guys, what's going on? My name is Ryan. I trade ETFs and like to make videos on the technical analysis that I'm seeing in the charts. So today we've got Biotech marked by XBI ETF, and we're here on the daily chart, and we can see that we had this confluence resistance. Now, confluence is where two different indicators align together, and so I have my first one drawing it from our absolute high to our absolute low, and it spit out some Fibonacci levels, and the next one I took it from our swing low down here to our swing high right here, and we can see that there are only two areas of confluence on this chart. One's right here down here, and the other one is right here. So I predicted that we would come up and get rejected off of this confluence resistance. This would also make sense because this is where we had our head and shoulders over here for back in late 2015. So I also saw that we might have been having this cup and handle action going on here, and we can definitely see that playing out. So let's go to the 2-hour chart. On the 2-hour chart, starting back here in September, we had this nice little symmetrical triangle pattern going on here with this blue line and this black line. We came up, hit our first resistance, came down, set our support. This is A, B, C, D, and E. Then we broke out above it, we came back down to retouch, and then from this point onwards, it was a whole new pattern. We kind of had this wedge going on here, and this might be an overthrow pattern, and we might turn bearish on it. However, with the strength we've seen in Biotech, I wouldn't be so sure. The wedge pattern that I was seeing here would be A, B, C, D, and this would be E up here. However, it would have been nicer to see E come up and get rejected off of this red line. Didn't do that, it broke out. There is a pattern for this called an overthrow pattern. I'm not going to get into it. But the point is that right now we are seeing a lot of bullish momentum right here. I do see one somewhat startling divergence here, and that is the hidden bull divergence, and that is when our CCI makes a low and then a lower low, while price makes a low and then a higher low. This is a hidden bullish divergence. Let's go to the 1 hour and see what we've got there. So on the 2 hour, I predicted a ascending wedge. I've yet revised that analysis. I think that we were actually in an ascending wedge. So right here with this bold black line and this lesser black line right here, we saw that we came up, hit our resistance. This is A, B, C. We had a false breakdown. Price rallied back up into it, rejected it, hit our D, E, and then we had a significant breakout. Now the measured move for this is from our swing high down to our swing low of our first support and resistance, and that would be this blue line right here. We take a clone of this and bring it to our point of breakout, and we got a technical target of 79.85, and I think our ultimate destination was 80.78 or something like that. So it was fairly accurate as far as the measured moves go, and I always like to see measured moves playing out to our favor. I did kind of think that this might be a head and shoulders playing out here with the left shoulder, head, and right shoulder. However, I'm not so sure anymore because the neckline doesn't work. The neckline would be downward slanted, and what you'd like to see is an upward slanted neckline. So I'm going to reject my hypothesis on lower time frames from last week that this might be a head and shoulder playing out. Let's go to the 15-minute and see what we've got there. So here on the 15-minute, we have a fairly complicated situation going on here, but I'm seeing 3 different possible patterns or price movements for XBI in the coming week, and I wanted to run through them here with you guys real quickly, so bear with me. First thing I wanted to note is this divergence. It's a hidden bearish divergence, while our stochastic as well as our CCI makes a high and then a higher high on both of these, while our price makes a high and then a lower high. So this is a hidden bearish divergence, and it kind of acts as a catapult trade, because the indicator is holding price up or holding price down if it was a bullish indication, and once the market comes to realize the true direction of the price, it kind of acts as a catapult. So I have 2 bullish situations going on here and 1 potential bearish situation going on here. I see a bull trap, a correction move / flag, which would be an ABC, and I can also see this breaking down and returning back to its point of breakout. So let's get into our Elliott waves. We had our breakout. This is 1, 2, long 3-leg, 4, and 5, and it would make sense with Elliott wave for us to have an ABC retracement. That's my first one, marked by these letters in parentheses here. We came down, had our A, came up, set our B, and it would make sense for our C to be below our A, and I think that it's plausible that our C would come to converge with this prior support line that we have set in here by this bold black line. If this is the case and we do break down and come to retrace all the way down to C, I can see us forming a bottom here at C before returning to our previous uptrend and moving higher. As far as the descending triangle goes, you can kind of see it coming in here. We set our first resistance, we set our first support. This is the blue line marking the bottom. This is our apex of the descending triangle. We roll over, set our A, B, C, and this would be the price direction here in these blue arrows moving up to D. We'd get rejected, flag down bearishly, set our E, and once we set our E, this would be the end of the bullish descending triangle, and I can see us breaking out, coming back down to retest closer to our apex point before moving higher and continuing our bullish run. The third one is that this is a potential bull trap right here, marked by this B. When price starts to break down and then it runs back up and then it breaks down further, this is considered a bull trap. So what's the typical bull trap look like? Well, it's when we have this big run up, we have this breakdown, there's denial, people buy on this dip right here, and then things start to look pretty good, there's a return to normal, and then we break down further. So this is the typical bull trap, and it's where people buy into a reversal. I think that this might be the situation that would play out if the bearish case comes to play. So we have this big run up, we have this new sort of topping pattern and downtrend here, and then we start to climb back up. People bought a lot right here, and I think it's also plausible for it to come back down, retest this previous support line. But if you look at the support line, we've only been supported by it once, maybe twice, 3 times, but legitimately only once, twice. And then if we fall through this level marked by my red arrows, I can see us coming up here, retesting this previous support that we've had right here once, twice, 3, 4 times maybe, and breaking down further back to our start of our uptrend bullish run here. So it's kind of complicated. There are 3 different patterns and things that I can see playing out for us here. We do have a hidden bearish divergence playing out in the price action. So once again, blue arrows right here are my descending triangle, and I can see us moving up higher. Second theory is that if you're going off Elliott wave, this could just be an A, B, C corrective move, and then we'll move up higher. And then if you want to play into that this is a potential head and shoulders / bull trap, or that biotech in general is just overbought right now, you could go with the ultra bearish red arrows, which would have us coming back down to C, coming back up to this previous support zone, getting rejected, and moving lower to our ultimate price target of 72.50. Anyways, that has been my technical analysis for Biotech, ticker XBI, this week, and I really hope you enjoyed it. If you did enjoy it, please drop me a like, subscribe, send me a comment, communicate with me. I love talking with you guys. So I wish you the best of luck trading next week, and happy 4th of July.